Against a background of data over the last couple of weeks which indicate that the US economy is continuing to slow, the Federal Reserve gave its greatest indication overnight that it would intervene to boost that struggling economy. The one problem is, however, that the Reserve did not actually say what measures it would take or when they would start. As if to underline that weakness in the US economy, manufacturing data showed that again in the month of July, manufacturing sector in the US continued to slow. However, there was some good news. A private payroll report showed that in the private sector, in July 163,000 new jobs were added, with the expectation was around 120,000. Going across the Atlantic, however, to Europe, the news was universally bad around manufacturing. The manufacturing data showed that for Spain, Italy and the United Kingdom, the manufacturing sector continued to contract in July. And in fact, for the UK, it was the greatest contraction in more than 3 years. Looking at markets then, the Dow fell by around 30 points, and the European indices were a mixed bag. The UK index and the German index were up, and the French one down. In terms of currency, the Kiwi was actually up marginally against most of its trading partners, and still hovering just under their 81 cent against the US. Japan and South Korea are two significant destinations for New Zealand's export beef market. However, both those markets have seen significant contraction over the last couple of years. In terms of Japan, for the first 5 months of this year, New Zealand's beef exports there have decreased around 12% against a contraction in the market of around 5%. A couple of the primary drivers revolve around currency. First, the overall strength of the Kiwi currency, but also the relative weakness of the US dollar, which has allowed US imports in there to a significant degree. In terms of South Korea, the news is even worse. For the first 5 months of the year, New Zealand's exports there are down by around 25%. What's driving this is potentially a significant increase in domestic South Korean production. Their beef production is up around 35% for that 5 months year on year. One of the other things which is also hurting us is the free trade agreement that the South Koreans have signed with the US, which is allowing much freer access for US beef. Yesterday I talked about the drought and the impact on US beef production and the fact it's likely to bring US beef production backwards. That in itself is likely to provide a significant opportunity for New Zealand beef farmers, both in the US and in South Korea and Japan, as the available exports of US beef begins to decline.